South Korea says it is unable to pay $350 billion upfront to the US under a tariff deal proposed by Donald Trump. The country is now looking for an alternative.
It's not a win for anybody. It's a miserable deal.
It began, as so many global headlines do now, with a single post from the president. In bold, late-night capital letters, Donald Trump declared that America was winning again. The post touted a $350 billion investment framework with South Korea. Proof, he said, that tariffs and tough enforcement were finally forcing allies to pay their fair share. The numbers sounded heroic, cinematic even. The message, the art of the deal, was back. But time has already delivered its verdict. Behind the glowing promise lies a system paralyzed by distrust, frozen projects, and partners quietly shifting their money elsewhere. And tonight, we're going to pull back that curtain. Welcome to Traveling Vibes. If you're new here, don't forget to subscribe, because what's happening between Washington, Seoul, Ottawa, and Brussels right now will shape the next decade of trade, jobs, and technology. At first glance, the $350 billion pledge between the US and South Korea looked like a masterstroke. It was billed as one of the largest foreign investment packages in history. Battery plants, chip fabs, electric vehicle supply lines stretching from Georgia to Texas. Trump's advisors framed it as the proof that America First was working. Tariffs were leverage, not punishment. The message resonated with anxious voters who wanted factories back and blue-collar pride restored. But dig beneath the surface and the cracks appear fast. Reuters data shows that of the $350 billion framework, less than $28 billion has actually been allocated, and only a fraction of that physically broken ground. Meanwhile, the rest sits in negotiation limbo, slowed by new visa restrictions, cost spikes from tariffs on copper and steel, and uncertainty about whether contracts signed today will still be legal tomorrow. Investors hate nothing more than unpredictability. Then came Georgia. In May, a routine immigration inspection at a battery cell plant outside Savannah escalated into a full-scale raid. Federal officers detained over 300 South Korean engineers and specialists for visa irregularities. Most were legitimate workers brought under a long-standing industrial partnership. Within hours, Korean news outlets carried images of handcuffed technicians, men and women who had moved their families halfway across the world to build what was supposed to be the symbol of US-Asia cooperation. For Seoul, it was a diplomatic earthquake. For Washington, a public relations disaster. For the families of those engineers, it was a nightmare. One of them, a young mechanical supervisor named Jin Woo, told Korean television he hadn't been allowed to call his wife for 48 hours. His little daughter kept asking when Dad would be home. When he was finally released, he told reporters, "We came here to work with America, not to be treated like criminals." His words ricocheted across South Korea's media and through the investment community. Within a week, South Korea's trade ministry announced a review of all pending US project commitments. European investors took note. And quietly, Canada's provincial development agencies began making calls. What's unfolding now is what economists call a trust shock. For decades, the United States sold itself as the world's most predictable partner: rule of law, stable contracts, open talent. Today, that image is cracking under the weight of enforcement theatrics and tariff whiplash. When the government promises massive tax breaks one month and threatens new duties or raids the next, capital freezes. It's not ideology, it's math. Cornell researchers and the Peterson Institute both estimate that across multiple rounds of Trump-era and successor tariffs, the drag on U.S. GDP growth ranges from 0.3 to 0.7 percentage points annually. That may sound small, but in a $25 trillion economy, it's hundreds of billions lost and thousands of delayed projects. Take the Revolution Wind project off the Rhode Island coast. It was supposed to power 350,000 homes and anchor America's clean energy transition. But when tariffs on imported copper, turbine components, and specialized cables hit, costs surged by over 30%. The developers filed suit, work was halted, local unions saw overtime vanish. In Connecticut, some of those workers now drive north to Quebec for steady pay. The irony? Canada's Federal Energy Agency just announced record exports of clean electricity to the US, a reminder that every canceled turbine blade is an import opportunity for someone else. Meanwhile, the administration doubled down, expanding steel and aluminum tariffs to derivative products, bolts, cables, subcomponents, creating cascading price hikes through construction and manufacturing. It's one thing to target unfair trade. It's another to make every nut and bolt a national security issue. And while Washington was arguing semantics, Ottawa and Brussels were quietly offering certainty. 10-year tax credits, green tech visas, and simplified permitting. Predictability became their greatest export. The Georgia raid remained the emotional touchstone. Weeks later, when a delegation from Seoul arrived in Washington to seek assurances, they were met with polite words but no clarity. A senior Korean official told CBS News, "How can we ask our companies to invest billions when their people are detained on the factory floor?" That single sentence captured the moment's gravity. Investment isn't just numbers, it's trust made visible. Even European partners began recalculating. The European Union's Global Gateway Plan, initially pitched as a complement to U.S. cooperation, now lists Canada and South Korea as preferred co-investment hubs. Brussels committed $600 billion in development and infrastructure capital over the next decade, but the first tranche went not to Texas or Michigan, but to Ontario and Bavaria. Money follows confidence. Inside the White House, aides defended the tariffs as temporary pain for long-term gain. "We're bringing leverage back," one official told reporters. "These companies will come home." But the data tells another story. Foreign direct investment inflows to the United States fell by more than 25% in the last fiscal year, according to the Bureau of Economic Analysis, while Canada's rose 14% and the EU's outbound capital increased sharply toward Asia. To be clear, not every project is dead. Hyundai's EV plant in Georgia continues construction, though slower than expected. But even there, senior engineers have quietly shifted parts of their supply chain design to Quebec and Slovakia, anticipating regulatory swings. Once trust erodes, redundancy becomes strategy. Every few years, America's trade debate swings between openness and protection. Tariffs sound strong, they photograph well, they win applause in factory towns. But beneath the applause are real costs, often invisible until the next fiscal quarter. Economists at Yale's School of Management call it the fog of policy risk. When rules change faster than capital cycles, investors pull back preemptively. They don't wait to be punished, they diversify, and that's exactly what's happening. In Ottawa, Canada's trade minister framed it bluntly: predictability is prosperity. Within months of the Georgia raid, Canada and South Korea inked a side agreement guaranteeing visa security for engineers on joint green tech projects. The EU followed with its own assurance clause. It was a diplomatic jujitsu, turning America's crackdown into everyone else's marketing pitch. You can see it in the numbers. The Canada Energy Regulator reports record-high electricity exports to the US and record profits. Uranium shipments for American reactors are also up, according to the Energy Information Administration. While Washington talks tariffs, Ottawa sells stability. Then there's copper. It may sound dull, but copper is the bloodstream of the modern economy. EVs, wind farms, smartphones, grids, all depend on it. When tariffs pushed domestic prices above global benchmarks, thefts spiked nationwide. Cities from Houston to Detroit reported surges in copper wire theft from substations and construction sites. Police call it tariff crime, proof that economic stress doesn't stay on paper. Each of these mini-crises feeds the same narrative. Policy built on pressure and unpredictability breeds chaos. It discourages long-term thinking, invites short-term exploitation, and chips away at America's reputation as the world's safe bet. Even among Trump's allies, some are privately uneasy. A senior Republican senator conceded in an interview that businesses can handle high taxes or low taxes, but they can't handle guessing. The markets agree. Wall Street's volatility index spiked after each major tariff announcement. The pattern is unmistakable. Tweets move trillions, and trust erodes a little more each time. For families like Jin Woo's, the macro data means little. What they remember are the nights spent waiting outside detention centers, the uncertainty about jobs, the humiliation broadcast across continents. Their story became a symbol in Seoul, news anchors referring to the Savannah episode as shorthand for risk. Within months, Korean pension funds shifted billions toward European and Canadian infrastructure bonds. The migration of money mirrored the migration of faith. Meanwhile, at the dormant Revolution Wind site, a union foreman named Clara Martinez still visits the pier where turbines should have risen. "We were told this was the future," she says. "Now we're just guarding crates." Her crew's paychecks stopped. Some moved south, others north. The wind still blows, but the opportunity sails past. So how did we get here? Part of it is philosophical. The current trade doctrine treats economic relationships as zero-sum contests to be won or lost. But investment isn't a football game. It's a trust fund. Every tariff, every visa crackdown, every sudden reversal tells the world, the rules are temporary. And when rules are temporary, contracts become disposable. In the end, it's not just about money or politics, it's about trust. When that's lost, even billions can't bring it back. Thanks for watching. Don't forget to subscribe and stay with us for more stories that uncover what's really happening behind the headlines.